Hello, good morning, and welcome to another exciting time. We talk about business. It is Business 360, and my name is Blyden Okem. In Business 360 today, we'll look at some of the biggest stories, the biggest talking point in it. We'll also x-ray the fine details regarding the markets, the commodities, as well as the foreign exchange market. We'll look at the stock market and the direction that comes with it. From a European point of view, we'll talk about the open AI system, the politics that's going on there, and we begin from there. OpenAI co-founder Sam Altman will return as boss just days after he was fired by the board, according to the firm. The agreement in principle involves new board members being appointed, the tech company added. Mr. Altman's sacking on Friday astonished industry watchers and led to staff threatening mass resignations unless he was reinstated. According to the man, he said, "I am looking forward to returning to OpenAI," Mr. Altman said in a post on X, formerly Twitter. He added, "I love OpenAI, and everything I've done over the past few days has been in service of keeping this team and its mission together." Meanwhile, OpenAI dished the only 2 women on its board. So far, it's replacing them with men. OpenAI announced a new male-dominated board after Sam Altman won the battle to return as CEO. Helen Toner and Tasha McCauley are stepping down, but fellow co-member Adam D'Angelo is staying on. The lack of diversity in its current selection has sparked a debate online. Now to Africa. In Africa, Malawi needs nearly $1 billion in debt relief from its creditors by 2027, according to the International Monetary Fund's announcement. The country is faced with severe shortages of essential items such as medicine, fuel, and fertilizer, primarily attributed to chronic foreign currency shortages. The IMF report specifies that Malawi requires $887 million in debt as debt release from its commercial creditors and an additional $99 million from its bilateral creditors for the period spanning from 2023 to 2027. Last week, the IMF Executive Board granted approval for a 4-year loan of $178 million to Malawi. Securing a commitment from bilateral creditors, particularly China and India, to restructure their share of the external debts, which stood at $4 billion at the close of 2022, was a crucial prerequisite for the IMF board's endorsement of the loan. Earlier this month, the country devalued its currency by approximately 30% and raised fuel and electricity prices. Still in Africa, Tanzania's Ms. Neema Nduma is one of the only 2 Africans selected by the Agricultural Research Grant for Grow Further to receive a grant of $63,000. Alongside her fellow Ghanaian prize winner, she received the grant on the heels of her idea to use tech to solve the problems in agriculture brought about by pests as seen in the Tanzanian news publications. She was selected for her innovative use for smartphones to detect crop diseases early. Selected from over 700 participants, Nduma expresses gratitude and a sense of responsibility to deliver meaningful results for agriculture and food systems. Now in Nigeria, the former governor of the Central Bank of Nigeria, CBN, Godwin Emefiele, who is on trial for fraud and corruption, has been granted bail. Former CBN Governor Emefiele has been granted bail in a high-profile fraud case. Emefiele's bail was set at $333,000 bond and property securities and sureties in Abuja. This is following the court's decision to remand him in prison on Friday. Meanwhile, Nigeria has set an ambitious goal to boost the arts, culture, and creative economy and its contribution to the GDP to 10% and increase the sector's economic output to $100 billion by 2030. The Minister of Arts, Culture, and Creative Economy, Hanetu Mosawa, made this known while unveiling the ministry's roadmap. The goal is to establish Nigeria as a leading global hub for arts, culture, and creativity by 2030. Let's talk about Lagos. Lagos states the commercial hub of Nigeria is losing 4 trillion naira yearly to traffic congestion. A recent study by the DTH Institute for Research disclosed this on Wednesday. The study, titled Behavioral Causes of Traffic Congestion in Lagos, funded by the Bank of Industry and Africa Finance Corporation, stressed the need for immediate action to alleviate the economic and social toll on the residents. According to the Executive Director of the DTH Institute for Research, Franca Oveja, the staggering loss could otherwise be directed towards vital sectors such as education, healthcare, and infrastructure development. So we're talking about businesses in Nigeria. President Bola Tinubu has approved the sale of more oil and gas fields abandoned by the international oil companies IOCs. The president is given the green light for conduct of fresh marginal field and its bids for the gas field, which has been laying fallow for over a decade. This was disclosed by the Minister of State for Petroleum Oil, Senator Henneken Lakpobiri, during a facility tour of Walter Smith Petroleum Oil Limited's modular refinery in Ibekwe, Ohaji, a Bema local government area in Imo State. The minister said the bid exercise would commence soon. The new bid round is coming barely 3 years after about 57 marginal oil fields were put up for sale in 2020, and the process effectively concluded last year, amid many of the awardees still struggling to move to sites for development of their assets, due largely to funding and regulatory challenges. And finally, from Nigeria, the 3 tiers of government, federal, state, and local government received 906.96 billion naira as revenue from the Federal Account Allocation Committee in October 2023. Stephen Kalibi, Director of Press and Public Relations of the Ministry of Finance, disclosed this on Wednesday in a communique. According to different reports, the communique, the 906.955 trillion revenue is a part of the Federation's total 1.35 trillion naira revenue generated in October. The total figure shared for October represents an increase of 3.48 billion naira compared to the 903.48 billion naira shared in September 2023, recovering from a decrease recorded in the previous month. Accordingly, the federal government received 323.355 billion naira, the states received 307.717 billion naira, the local government councils got 225.209 billion naira, while the oil-producing states received 50.674 billion naira as derivative 13% of mineral and mineral revenue. Let's still talk about the federal government. The federal government has inaugurated an Energy Management and Control Center established in Abuja to monitor electricity mini-grids operating across the country. It said the center, known as the Energy Management System, would serve as an off-grid electricity supervisory control and data acquisition system for many power grids in Nigeria. Speaking at the launch, the center in Abuja on Wednesday, the Minister of Power, Debayo Adelabu, said, and I quote, "For us, the EMS is not just a tool. It is a mechanism we plan to optimize to alleviate the existential problem of poor energy data in the nation's energy space." The Chief Executive Officer of Rural Electrification Agency, Ahmed Salih Hiju, said the center constructed in Abuja headquarters of REA was made possible with the support of the Korean government under its official development assistance. We'll go on a short break. When we return, it would be Business 360 continuing and looking at economic statistics all around the world and the markets. Don't go anywhere.
Brilliant broadcast and entertainment, sports on the go, and news from the Watch Spectrum TV on StarTimes DTH Channel 421 and free-to-air frequency 12733. Visit our website, spectrumtvlive.ng. Spectrum TV, broadening your horizon.
Welcome back. It is Business 360 and my name is Blyden Okem, looking at global economic statistics around the world, beginning with the UK. The UK economy will grow much more slower and slowly than expected in the next 2 years as inflation takes longer to fall, the government forecaster said. Living standards are also not expected to return to pre-pandemic levels until 2027 to 2028. The Office for Budget Responsibility (OBR) said. It comes as the Chancellor announced tax cuts and a rise in benefits in his autumn statement. Labour said people were still paying for Tory economic recklessness. Meanwhile, the UK Chancellor of the Exchequer, Jeremy Hunt, says, according to him, our plan for the British economy is working, but the work is not done, as he delivers the autumn statement in the House of Commons. Let's find out more.
After a global pandemic and energy crisis, we have taken difficult decisions to put our economy back on track. We've supported families with rising bills, cut borrowing and halved inflation. Rather than a recession, the economy has grown. Rather than falling as predicted, real incomes have risen. Our plan for the British economy is working, but the work is not done. Others proposed a more short-term approach, but we have not made unaffordable pay offers to the unions. We have not stopped new oil and gas exploration, and we have not increased borrowing by £28 billion a year. That would have pushed inflation up just when we need to bring it down. Instead, under this Prime Minister, we take decisions for the long term. In today's autumn statement for growth, our choice is not big government, high spending and high tax, because we know that leads to less growth, not more. Instead, we reduce debt, cut taxes and reward work. We deliver world-class education. We build domestic sustainable energy, and we back British business with 110 growth measures. Don't worry, I'm not going to go through them all, but well, I will if you like. But in summary, Mr. Speaker, they remove planning red tape, they speed up access to the national grid, they support entrepreneurs raising capital, they get behind our fastest growing industries, they unlock foreign direct investment, they boost productivity, they reform.
Meanwhile, the Bank of Indonesia kept its key 7-day reserve repurchase rate steady at 6% in its November 2023 meeting, in line with market expectations, after a surprise 25 basis point hike in the previous meeting. The central bank said the decision is consistent with maintaining the rupiah's stability and mitigating against imported inflation. The overnight deposit facility and the lending facility were also kept at 5.25% and 6.75% respectively. Meanwhile, policymakers expect the inflation to stay within the target range of 3 to 1% this year and 2.5 to 1% in 2024. The central bank also kept GDP growth forecast for this year at 4.5% to 5.3%. But the growth is seen improving next year on spending for elections and strategic government projects. The current account GDP forecast for 2023 was maintained at a negative 0.4% to 0.4%. Now to the commodities. Soybean slide, corn is firm and wheat prices are higher. While soybean slide, corn firm and wheat higher and Virginia McGathy, examines Wednesday's grain market. Let's get to hear from Virginia.
Today in the grain market, soybeans were lower. There is rain expected in the dry areas of Brazil. Futures were down about 6 cents today as markets did hit some resistance at that $14 level. We just can't seem to get above it at this point right now. There isn't much happening in the option open interest. However, we do have 96,000 calls versus 77,000 puts. Now the CVOL was up across the board with the beans at 20.5%, the soybean oil at 34%, and the soybean meal at 33%. Corn today was firm with the supply seemed to be in a comfortable area. The basis prices did improve as we wrap up on the harvest ahead of that Thanksgiving weekend. Today we ended up about 1.5 pennies, but we're still about 7 cents below that $5 benchmark. Interestingly enough, though, as options expire for the December contract, we have the corn ending up.
Let's look at the Brent crude oil. Brent edges lower as U.S. crude stocks jumped. Brent crude futures fell below $81 per barrel today, extending losses from the previous session, as official data showed that U.S. crude inventories jumped by about 8.7 million barrels last week, way above forecast for a 1.16 million barrels increase. Signs of robust supplies, particularly from non-OPEC countries, have been weighing on oil prices, raising speculation that OPEC Plus could decide to extend or even deepen supply cuts. Meanwhile, crude prices stumbled nearly 5% on Wednesday before powering much of the losses as OPEC Plus rescheduled its policy meeting to the end of November, as disputes arose over output quotas for African members, including Angola and Nigeria. Analysts expect Saudi Arabia to extend its additional voluntary production cuts into 2024, while other members are seen committing to existing quotas as well. Now let's move to the energy market and see what the prices are this morning, and afterwards the metal market and agricultural commodities, the markets. Energy commodities this morning have shown some negativity all around through the market, beginning with U.S. crude, the West Texas Intermediate crude. $76 per barrel is the price, a negative 1.36% decline. Brent's price, which is Nigeria's price benchmark, is $80 per barrel, downward by 1.079 points, a negative 1.32% decline. Natural gas, gasoline, heating oil, a little here, a little there. Now to the metal markets. What the prices are for the metals. Gold price is upward this morning by 4.34 points after dropping from yesterday's 2,000 point mark. It's going slightly upward this morning. $1,994 per ounce is the price of gold, a 0.22% appreciation. For silver, it's similar story. Silver price is at $23 per ounce, indicating different outlook and perspective. Well, copper, on the other hand, a current price for copper is $3.7988 per pound, moving up by 0.0317 points, a 0.84% appreciation, while steel price is downward by 36 points. Let's look at the agricultural commodities this morning. The price for soybeans. Soybeans this morning, current price is $1,356 per bushel, upward by 0.25 points, a 0.02% appreciation. For wheat price this morning, $558 per bushel, upward by 2.26 points, a 0.41% increase. A lumber price upward by 6 points, palm oil dropping 28 points, palm oil price moving quite fast, at some point 81 point downward, a negative 0.7% this morning on the decline. 3,960 Malaysian ringgit per ton is the price of palm oil. While talking about businesses, and we're moving towards the foreign exchange market, 2024 is set to be a promising year for currency markets as investors increasingly appear convinced that the U.S. will be the first to lower interest rates while other countries maintain tighter monetary policy. That differential is set to generate strength in the number of foreign currencies, and Mexico's peso is positioned to be one of the prime beneficiaries. Let's find out details regarding the Mexico peso from Ira Ibsen. Let's find out more from Ira.
A number of currencies have been rallying against the US dollar, the Mexican peso included in that. Now in the peso, we're going to get GDP for the third quarter. That's coming out this week. We've heard from Bank of Mexico governors. They are saying that inflation is still too sticky, too hot, and they don't believe that it's time to cut interest rates. We have that same type of talk from our governors in the United States, and as you already know, the market is pricing in swifter cuts coming possibly as fast as March. Whether that proves to be right or wrong, that remains to be seen. But in the meantime, because of the inflation story in Mexico, the governors are sticking to their way, and they're talking maybe the latter part of 2024. Therefore, like so many other currencies, the markets are starting to price in the dollar is going to be one of the first to go with lower, in other words, cutting interest rates, while other currencies, including the peso, stay tight. That differential keeps a bid to a number of foreign currencies. A number of currencies have been rallying.
Now, looking at these outlooks from the markets, let's quickly look at the euro against the US dollar and what the perspective is amid different outlook for the Mexican peso moving forward, looking at the 2024 season. The euro against the US dollar. The euro against the US dollar this morning on the positive note is at 0.3% increment. A 1.09 point mark is the price for the pounds against the US dollar, still at the 1.25 point mark. The Aussie against the US dollar. It's been a morning where most of these currencies are gaining slightly over the US dollar. A 0.33% increment for the Aussie over the US dollar. Quickly, let's look at Naira's perspective and what the price level is. The US dollar against the Naira, 803 Naira equals $1. On a yearly basis, it's been an increase of 81.49% for the US dollar over the Naira. The euro against the Naira, current price level is 889 Naira equaling €1. A downward movement for the euro at a negative 0.4081 points, a negative 0.05%, indicating the Naira gained slightly over the euro. For the pound against the Naira, at 1,023 Naira equaling £1, and an upward movement of 0.2693 points for the pound over the Naira. And now we go to the Paro market and see what the prices are in the Paro market. Looking at the buying rate for the dollar to Naira, 1,163 Naira equals $1. At the selling rate, 1,153 Naira equals $1 in the Paro market. The pounds to Naira, 1,456 Naira equals £1 at the buying rate, and selling rate 1,425 Naira. The euro to Naira at 1,248 Naira to the euro at the buying rate, and selling rate 1,228 Naira. And quickly, let's look at the digital currency, Bitcoin and the rest. A Bitcoin price is standing at $37,635 to one Bitcoin, upward by 13 point. Market is moving quite fast. A 0.02% increment this morning, advancing at that level. Similar story for Ether, gaining just 5 points. $2,086 is the price of Ether. A Binance downward this morning by a negative 1.77%. $233 is the price of Binance. And finally, the Nigerian stock market. At the close of yesterday's market is giving different outlook to what the perspective could be. At the end of yesterday's trading session on Nigerian Stock Exchange, a total of 428.44 million shares in 6,677 deals, corresponding to a market value of 7.37 billion Naira were traded. Talking about the market capitalization, it stood at 39.1 trillion Naira. 117 listed equities did participate in trading, ending with 36 gainers and 15 losers. And the top gainers, Unity Bank led the gainers with 10% share price appreciation, closing at £1.54 Kobo per share. On the bottom, losers, C&I Leasing came out last with an end of day price appreciation of 7.56% at £5.26 Kobo per share. The top volume, Veritas Capital Assurance, recorded the highest volume of 62.1 million traded shares. This gives the direction to where the market could go today. And here we draw the curtain on today's edition of Business 360. Thank you for being a part of it. My name is Blyden Okem.